Hello out there and welcome everybody to Tackle Trading. We are Team Tackle. And thank you all for being here. We're finally here. This is it. We're going to get into the option success preview. Here we go. I'm going to teach you some options. We value your time and I'm going to give you all that I can to give you an exciting, powerful, and valuable lesson you can use in the financial markets. My name is Trading Coach Gino Poore. But first, we are a team. We are Team Tackle. And we have a goal here. Our goal is to bring financial education to the masses. Our mission is to bring financial education to the masses. And we do that by live classes, on-demand videos, blogs, podcasts, whole bunch of online content, systems, courses, and of course, our favorite, yes, our stock and options report we do every week where you can see what the pros are trading. So our stock and options report, and I'm going to actually bring that up and show it to you tonight. So about me, a little bit about me, guys. I've been trading since 1998, and I've been a pro trader only because of my education and experience. Now, I've had many mentors. I learned to master options, but the absolute number one tool a trader can utilize is education in the financial markets. But combined together with options. You put those two together the right way and put it in a system, and you have a powerful weapon in the financial markets. I then joined forces with some of the best traders who were also mentors, and we became Tackle Trading. So welcome to our trading community. I'm going to jump into this, guys, and I'm going to actually lower my video so you can see the screen. So what you're going to learn, of course, we are going to learn options. What are options? They are the best tool ever created to give the traders an edge, the advantage. And the two tools we're going to talk about, guys, and you might want to write these down or take a snapshot. This is Delta and Theta. These are going to simplify option trading for you. D&T, Delta and Theta, will help us get the best price for time. And then we're going to get into some option case studies where I'm actually going to bring up a stock, break it down, and place a trade here. We're going to compare stocks versus options and reveal the power of options. So what is an option? An option, now here's the absolute correct definition, but I'm going to make it easy. My job is to simplify it. So an option is a contract between a buyer and a seller that gives the purchaser of the option the right, but not the obligation, to buy or sell a specific stock at a specific price on or before a specific date. Yeah, say that in one breath, right? Here, let's break it down. What is an option? It gives a trader, an investor, the right to buy or sell a stock on their terms. You get the control. So why options? That's what an option is, but why? Well, first off, let me just take a big myth out there. Most people believe in order to make more money investing, you have to risk a lot of money. That is simply not true. Options do the exact opposite. The educated investor will tell you options, number one attraction is leverage. This allows investors to use less risk to make more money. Not more risk, less risk. We're going to show you how that's done to make more money. And one of the most powerful forms of options, cash flow, passive income. We're going to show you how to sell options. Money is working for you 24/7, not you. Not you. True investing is your money working. You're working smart, not hard, not physical labor, not putting in time and hitting that clock 9 to 5. No, we're talking about your money working 24/7. That is what your goal is. And finally, insurance, protecting your portfolio and your fortunes. Real quickly, look at leverage, cash flow, and insurance. Which of these three are important to you? Which one stands out? Well, guess what? In options, we call them options because they're choices. You get all three. And I'm going to show you how to utilize all three. So let's talk about this leverage. Leverage is simply a way from profiting from expensive stocks without owning them. You know, there's some really good companies out there. You know, $100, $200, even $1,000, $2,000 stocks. You probably would love to own those companies, but they're just too expensive. Options allow you to pay pennies on the dollar so you can actually make money from that stock's performance for a lot less. To give you a little example. Now, I'm going to compare real quickly a simple stock trade. A stock, I can go out and buy XYZ company for $50 a share, typical stock purchase, or I can control those shares by buying an option. I can profit from those shares and participate in the value of that stock by buying an option that allows me and gives me the right to buy the stock at 50. I'm not going to do that, but it allows me to. Now, the stock trader could buy 100 shares at $50. Option trader could buy one contract. What's the difference? I could go and invest in that stock, $50 a share, 100 shares, that's $5,000. Simple math. But the options, here's the traction, here's the leverage. That contract might cost me about $500. That's a big difference in investment. Now, let's say the stock performs and it goes up to $55 a share, from 50 to 55. When the stock hits that target, that's when I'm going to sell the option. Now, I'm not going to obtain the same amount of profit as the stock trader. I'm going to get about 60% of that. So if the stock made $500, the option makes $300. Now, what does that mean? The return on the stock, $500 return on $5,000, that's 10%. Not bad. Not bad at all. That's a good investment, right? But look how powerful the option return is. We're looking at 60%. So what is leverage? Lower risk, higher return, much higher return. That is the truth about investing. You don't have to risk a lot to make a lot. The goal is to risk very little to participate and diversify your portfolios. Now, this is one of the number one attractions is, hey, I could trade for very cheap. That's great, but that's not all. Options have a lot more power than that. My favorite, cash flow. The number one advantage an option trader has is passive income. You're playing time. Now, this is better than dividends or bonds or profit sharing. This is much better, higher return, and more consistent. It's like collecting rent on your property. Now, remember this. Consistent cash flow equals confidence. And by the way, whether you realize it or not, as an investor, this is your number one goal. We're going to teach you my favorite strategies and our team's watch list of strategies where we do covered calls. We have a Tackle 25 system where we find the best rentals out there. We're going to rent out our stock and bring in consistent cash flow, naked puts, credit spreads, and much more. Now, when I said whether you know it or not, this is your goal, this is the secret or the system that wealthy use. You buy, invest in stock. You sell calls. Why? Because I'm going to show you the power of time. How much value do you put on your time? Do you have a value on your time? Well, we're going to sell calls, and those calls are going to create what's called cash flow, consistent cash flow. And if the stock pays a dividend, you get that also. Now, remember, there are two different things. You get both. What are you going to do with that money? What are you going to do with the cash flow you're bringing in every month, every week, every quarter? Well, I'll tell you what the wealthy do. I'll tell you what I do. I use some of that money to buy more shares. Or maybe I'll pay bills. I'll do what I want with it because it's my money. The difference between just investing and trading is a trader gets paid while they're investing. That's right, even on your retirement accounts. So we're creating wealth. We're creating wealth. It's growing. Consistent growth. We're setting targets. This is the beauty of being a trader. Now, we're going to get down to something also very important most people don't realize about options. And third and final, insurance. Protect your investment. Put options were created as a form of insurance. You can protect your investment. Remember I said options are cheaper than stock, much, much cheaper. We're going to use that cheap premium of options and actually use it to protect our downside. Why? Because naturally, we want to protect the things we love and value, right? Think about it. Our family, our health, possessions. We have health insurance. We have homeowners insurance, car insurance. Most of us even have cell phone insurance. What about your portfolio? What about your trades, your retirement accounts? That's your future. You worked hard for it. Protect your nest egg, your portfolio. A little saying you've probably heard before is so true. It's not what you make. It's not how much you make. It's what you keep. So a little example of that. Here's a simple profit loss diagram. If you buy a stock, as the stock goes up, you can see the green here, you make money. If the stock goes down, and that does happen, well, you risk or lose money. Now, what we're going to do is we're simply going to show you how to buy a put and the exact put to buy. So as the stock goes down, see how it's going down the graph here? See how it's going down? Look what happens to the put. It goes up in value. It makes money. When you marry these two together, and we call it a married put, by the way, guess what you get? You get a graph known as victory. You get a graph known as V for victory. Let's see if you can see that V for victory standing out right here. See it? Now take a big breather. Here's your stock going up. Now when it goes down, what happens? It makes money. You're protecting your downside and you're actually capitalizing on it by ensuring that you make money. Not only ensuring your position, but ensuring that you make money. Again, consistency is the key. So again, there's a lot of uses for options. Which one's more important to you? We're going to get into the system for that. We're going to start right now with some 4 key terms. I don't expect you to remember everything if you're a beginner. Don't expect you to remember everything, but this is why we do it on a daily basis. This is why you get to follow us coaches to learn and grow. Number 1, key term. We have what's called a strike price. This is the price you get to pick as an option trader. You pick the price. Expiration date. This is the date the option expires that you get to pick. You get to pick when the option expires. Term number 3, the stock. Of course, you get to pick the stock too, right? You get to pick the stock or ETF or fund or any investment you want. Term 4, the premium. You get to control the amount you pay. So basically, these 4 key terms give you, the option trader, control. Now let's simplify this. Let's get into this. Let's break it down and make it easy. Why do we buy calls? Because if a stock's going up, it gives us the right to buy a stock at a set price and a set date. So we buy calls when we believe a stock is going up. Now, why do we buy puts? Now, because stocks don't always go up. Sometimes they go down, and we could buy puts to protect ourselves. But what if we don't want to protect ourselves? Maybe we just want to play the downside of that stock. It gives us the right to sell stock. We make money if the stock goes down. So you pick the stock, you pick the set price, and you pick the date. And how do you do that? We're going to show you. Now, this just opened up a whole new aha moment. I just mentioned that stocks go up and they go down, right? So this is a matrix that is very, very important because this shows you the true world of trading. Yes, you have a 401k, an IRA, a mutual fund, a stock. Everybody says buy low and sell high because you always want the stock to go up. But a trader, not really, because you have choices. You can play all different directions. If a stock goes up, I make money, but you know what's even better? I could buy a call. I could buy a call, and for pennies on the dollar, I make money when the stock goes up. But what if it goes sideways? You don't make any money. What if it goes down? You don't make any money. This is where we're going to teach you the power of options. Sell calls. Sell calls. I've sold so many options. I've got a nickname, which I'll share with you in a minute. What does this mean? On the other side of that option, the person who sold the call actually is making money when the stock isn't moving. It's going sideways. And they're actually making money when the stock's going down. Now to fast forward, you buy a put if you think a stock's going down. And also on the other side of that, you're on the other side of the direction. You sell a put if a stock's going up, you make money. And if the stock doesn't move, you make money. So all different directions, up, sideways, and down, are covered. Now, real quickly, here's a little bit of something to think about. This changed the way I invested forever. Now that I can play all different directions of the market, I realized that there's only one thing I could predict 100% of the time. And I just gave you the key word, time. I could predict time all the time. It keeps ticking forward. With or without you, it's ticking forward. I can predict it's going forward. That means, guess what? Options are going to expire based on time. Now, the stock market, as we know it, is open 6.5 hours a day. It's closed on Saturday, Sunday. It's closed on holidays. And out of that 6.5 hours a day, it's open. 17.5 hours, it's closed. So the stock market, there's only a chance of your stock going up or down less than 20% of the time. What is it doing over 80% of the time? It is going sideways. Your money's doing nothing for 80%. So if you're not capitalizing on the selling of options, you're missing out on, number one, making money all the time and very predictable. And number two, using a vehicle like calls and puts that give you a better return on time than anything out there I've ever seen. So making money on time is what it's all about. Again, what's the value on your time? So prior to the option really getting popularity, pre-1973, option trading was what we call the wild, wild west. It was like a flea market. What price were you paying? It was all over the map. It was like bargaining. There was no fixed model. Well, along came some geniuses that put together an option pricing model where it incorporates all the factors that are giving you a fair option price, a correct price. Now, in this option pricing model, how they're priced and why they're cheaper than stock is because it's based on time, volatility, stock price, strike price, dividends, interest rates, and a few other things. Bottom line, these geniuses that put it together started with Mr. Robert Merton. He put together the pricing of options and corporate liabilities pricing model. Then came Mr. Fisher Black and Myron Scholes, and voila, you've got the Black-Scholes model. And guys, here's what it looks like. There's the formula for options. Now, take a deep breath. Not going to teach you this. Not going to go into this. We're not going to figure this out. Computers do that for us. I've been trading since 1998. We've simplified this. Why? Do you remember these two things I talked about earlier? Meet the Greeks, delta and theta. D for delta and T for theta. D and T are everything. So we're going to get into this right now. This is where the learning, take some notes. Here we go. There's also vega, gamma, and rho. I know that. We're going to get into those. But really right now today, I just want to nail down delta and theta. Why? Because when it comes to an option contract, we're talking about a contract, the terms of the deal. Theta is time, delta is price. Just remember T for time, D for price. Now, any contract, any negotiation, isn't that the most important thing is what's the price for how much time? Maybe in a lease contract, maybe you're getting a 6-month lease versus a year. Is it worth getting the year? Is it a better deal? How about an insurance contract? How about a car rental? Is it better to rent 1 month or 3 months? How about car insurance? Is it better to buy car insurance 1 month, 3 month, or the year? What is the best price for the time? How do you know you're getting a fair price? Is this the right price for the right time? Because options, why do they call it options? Choices. You've got choices. So yes, you're going to have the freedom to make a lot of choices. Yes, you have a lot of control over your finances. Yes, but we're going to make it simple so you get the right choice. Buying options always gives you negative theta. When you're a buyer, negative means time is working against you because these options do expire. Now, we get to choose what side of the pendulum we want to be on. We also can be on the positive theta side. Now, I like being on the positive theta side. They call me, ready for this, the Theta Maker. Why? Because I sell so many options. I have targets where I want to make so much money for my time. I can tell you exactly what I'm making per day, per hour. And I know the value of my time. Do you? Your time's valuable, but what is it worth? So on the time decay curve, this is what happens to an option. You go out about 10 months and you buy an option, that option is going to decay over time. Now, it's not linear. It doesn't just go down straight. It actually goes more of a slight curve. And then notice the last 2 months, how steep this curve is. So what's happening here is as the option gets closer to the expiration date, we start to see a faster rate of decay. It starts to nosedive in value and it becomes worthless. Now watch this. The fastest decay rate is about 1 month to 6 weeks out. We call this the cash flow zone. Now, how do we create cash flow? Selling options. Why? Because options die quickly that last 6 weeks. These are the ones we want to sell. Now, real quickly, all options die at the expiration date. The time value on them disappears. If you own the option, you lose whatever you paid for it. If you sold the option, you keep that premium. All out of the money OTM options expire worthless. This is the important acronym to remember, out of the money. How far out of the money? I'm going to show you right now. Options expire worthless. I can tell you exactly the percentage. And then finally, only options that are in the money are worth anything and they're auto exercised in the buyer's favor if you're a buyer. So getting into the options, when I said you've got choices, I'm going to bring up an option contract. At first you go, okay, there's a lot of choices here. But again, we've been trading options, our team, for many years. We've got systems, and a system tells you exactly what to do. So we're going to show you based on time, what expiration date. So remember, theta, what expiration date? The date on which an option contract becomes invalid. It expires. So here's your expiration dates down here. And to simplify that, here's how many days of expiration. 4 days, 11 days, 18 days. Remember, when we sell options, we want 4 to 6 weeks of time as a seller. See here, so I want less than 6 weeks, which is 42 days. All these right here down to October, see the 39 days? These are the qualifiers of the ones I'm going to sell. And each strategy is going to point at the exact one to sell so you can create consistent cash flow. Now, what if you're a buyer and you want to buy calls and puts for leverage and protection? Here's the simple formula. How long until you hit the target on that investment? Add 2 months to it. We simply add 2 months to our expected move. And what's 2 months? 60 days. If you look down here, anything greater than 60 days, these are the ones we're buying. Well, there you have it. Now you know about time. Now, what about price? What about price? Because now we know time, what we're buying or selling. What about price? This is going to point us at the exact option. So delta. Delta is two-dimensional. It has a lot of meanings. I'm going to use 2 of them. The dimension number 1 is the rate of change. It basically tells us how much the option is going to go up in value as the stock goes up. It's not parallel, but we get to pick the delta of what percent of the move. So a stock moves $1, we're going to shoot for about 60% of that value. Now, options have a delta between 0 and 100. Stocks, 0 to 1. Basically 1 delta per share. The second dimension on delta, and this will be very clear when we start pointing them out and using them, is you get the probability of your trade being successful. It tells you the probability. Remember that mathematical formula? So check it out. We're going to look at the option chain. We're going to put in the column delta here, and watch how easy this is. You pick the strike price. How do you know? Now, what's a strike price? You get to pick the price you want to buy or sell on the stock. Do you want to buy the stock at $50? Do you want to buy it at $40? Do you want to buy it at $55? You get a pick. But there's actually a method to the system. Again, the strike price of an option is a fixed price at which an owner of the option can buy or sell. Delta makes it easy. You bring up delta on your chain. Buyers, we're looking for the delta closest to 60. So out of all these choices, we really have maybe 1 or 2. I could buy the 48 or 49. I'm going to buy the stock at 48 or 49. Now, what if I'm a seller? Now, by the way, this 55 or 63, that's the percent chance of you being successful over time on that move. And that's the percent you're going to make on the stock move. Sellers, we're going to sell deltas with a probability or delta between 10 and 40. Now, that means I can look over here. These are the options that are out of the money, and they have somewhat chance of being probable. 39 here, that's close to 40, right? That's the highest one we'd go. Has a 40% chance of being valuable, 60% chance of expiring worthless. Look at this guy down here, 12. That means there's only a 12% chance of that being worthless, 88% chance of it expiring, 88% consistency of you making money. So now we have two Greeks to point us in the right direction. So real quickly, I'm going to go into a simple example. Just from what you've learned right now, how would you like to follow a professional trader? We actually use these calls and puts every day in our trading. We do this all throughout the week in our live shows. Every week we put up a watch list so you can look at it. I'm going to simply go in here and grab one of my picks from the watch list. And this is camping rolled. I like to set up here. I'm going to break this down and show you how easy. And we're going to walk through step by step on how we break down a trade like this. Here's a chart on camping rolled. And what I'm looking at is technical analysis, charting, our number one tool for timing, our number one tool. So I'm looking at the chart here, and you can see that there's this little support area. It broke down. It's been trending down all the way down to $24.50. Now that it's crossed over what we call moving averages, we're seeing a reversal of trend here. So I can see a little bit of resistance right about 31. I can see my moving averages crossing over. Again, we're going to give you some courses exactly how to read these. My proprietary indicators are giving me a buy signal here, a buy signal there. These are my training wheels. After a while, you won't need them, but guess what? All three arrows are pointing up. This means trend reversal. Now you see this overhead support here that it broke? That's my target. That is, we'll just call it $35. So I'm going to move that line to $35, roughly there. And for the sake of argument, I would wait for a trigger point here at 31, but let's just say I felt confident on this trade here. I'm going to buy in about, right now it's 28.98. I'm going to put a stop loss. That's right. I'm going to put a stop loss right here just below 28. Now, when I put the stop loss here, what is that doing? Well, if I buy at 29, right here, that is my risk of $1. But check this out. I have a target way up here at 35. That is a $6 reward for $1 risk. Not a bad trade. I like that. Now, let me show you what that looks like on a profit loss graph. Now, this might be brand new to you, and you're going to learn how to read profit loss graphs. I'm going to go in here, and I'm going to put in those numbers. Here's my $35 target. Here's where I'm buying it now at 29. That's my exit price of $28. Now, why do I do that? Because whether it's a stock or an option, we exit when a stock's not performing. We do what's called a stop loss. We don't risk all of our money. So again, I'm going to go in there. I could buy the shares. That's $2,900, and my target's 35. But watch how it is. Instead of buying a stock, watch how easy it is to buy an option. I'm going to hit trade. Here's the option chain. I'm going to go out more than 2 months. 130 days is right there. I've got my column for delta. What delta do I want? The one closest to 60. So I've got this one at 27 strike or this one here. Now, again, you get to pick either. I think 57.8, that's 58 right there, is close enough. If I buy that option, there's the price I want right there, $4.50. What does that look like on the profit loss graph? Here, real quickly, is the stock price. Here is my target of 35. What does it say my profit would be based on the delta? $400. What if it goes down to 28? What's my risk? $60. Risking 60 to make 400. Now, let's break that down in numbers. We're going to go over technical analysis in the next class. We're going to go deep into how to read all this and everything we just did here, and we're going to walk you through it. But let's break those numbers down just so you can see the bottom line. What we were looking at is a stock, and that was Camping World CWH. $29 was the entry price. Instead, we're buying a call. Same time we buy the stock, but instead we're buying the call. Yes, you could buy 100 shares. That'd be $2,900, but I'm going to buy the 28 strike price. The stock is $2,900, the option $450. Big difference. You sell at 35, that's a $6 move for the stock. We're going to sell the option when it gets to 35. So we're never taking assignment of the stock. We're just playing the move of the option. The profit on the stock is $600. Profit on the option is $400. Right there, the return on the stock, 20%. Return on the options, 88%. Let me highlight this. Lower risk, much higher return. That's how simple it is to participate. Now, there's so much money left over, it allows me to diversify and play the other trades on the watch list. That's called using your education and doing options the right way. Well, by now, you can see the advantage of a little education. You guys, I hope you realize options give you an unfair advantage. You've got the power of choices. So now you know why hedge fund managers, which are option traders, are some of the wealthiest people in the world. You can use options to increase the value of your time. You can put a value on your time. We're going to show you the different strategies and systems. But let me show you what it takes to do that. Because right now is the right time and the right price, because guess what? We've got everything you need at tackletrading.com. Here's our educational ecosystem. We're going to start with the Trading Justice and the Huddle. These are podcasts you can plug into every week. We have reports, the Tackle newsletter, scouting reports, stocks, options, and commodities. Now, the newsletter and stock and options report is one of our most popular reports where you can follow what we're investing in trading. We also have live shows all throughout the week, live on YouTube, every morning lounge, coaches show, things so you're dialed in all the time with the coaches. And yes, you interact in these live shows. Courses, check this out. Which one are you going to do first? The 7-Step to Guide to Trading, Tackle 100, Charting, Options 101, System Development. We've got some courses for you. And blogs. Tackle Today, Tells Them a Tech. We got plenty of blogs. We also have plenty of tools on our website. You can have fun checking those out. We've got a lot of fun things for you to check out. Don't forget the covered call list. This is our #1 Theta list for creating that cash flow. It's one of my favorite. And social media, we have our own community. Real quick, are you part of a trading community? Do you have a group of people like-minded that you can talk to 24/7 on your own social media? I'm not talking about Facebook or Twitter. I'm talking about Discord, our exclusive channel, so you can interact with coaches and other traders and other professionals that are watching the same stocks and strategies you are. You have a team. So guys, there it is. This is the link right here. It's also in the link below. You can join Tackle. By this time, remember I said right now is the right time and the right price? Let's talk about that price. It's $97 a month for our pro members, but guess what? I got an even better price. How about free? You can have a 15-day free trial. Check out all this stuff. Check out all the courses. Go in there. Overwhelm yourself with education. Meet the coaches. Meet all the other traders out there. You guys, welcome to the team. Let's get in the game. And real quickly, I want to finish by going over a couple of reviews. We do have a 5-star Trustpilot review. That is the highest it gets. I just want to read a few of these testimonials from my past students here. This is Marco Collado. There is no better tool for learning the financial markets. Their teaching, their content, their community, and their experience is second to none. That's for sure. How about this by Paul? Very active environment for traders. This is a very active environment for trading enthusiasts and professionals. All of our coaches are traders. This is what they do, guys. You have a team of professionals. They offer a plethora of resources and live shows. Their support is also top notch. And finally, what does Mr. Patel say? The market can give you as much money as you want, but for that you need skill. Tackle Trading will give you that skill. And guess what? We're going to make it fun. This is what we do. This is what we love, and we love our trading community. Thank you, everybody, for being part of the Tackle Trading 101 series here. And I will see you at tackletrading.com. This is Coach Gino.